Today we will discuss about a very important topic, that is Sundry debtors. This is a very much popular term used in the business. So let's have an in-depth analysis about Sundry debtors. So the word sundry, at first the word sundry means total, and the word debtors means customers. So sundry debtors means total customer of the business. Now we will see how sundry debtors arises in the business. First, there must be a sale in the business. The business, we know that every business unit involves with the selling of goods and services. So sales can be categorized into two types, cash sale and credit sale. What do we mean by cash sale? Cash sale means at the time of sale, cash is being received. Credit sale means when the sales are made, cash is not received immediately. So the firm is selling, when the firm is making the credit sales to those customers to whom the business unit is selling goods in terms of the credit, they are known as sundry debtors in the business. So who are the sundry debtors? They are the credit customers of the business. The firm used to sell goods to them in terms of the credit. Say the firm is selling 5 customers A, B, C, D, E. Mr. A, B, C, D, E, they are the name of the customers. 5 customers are there. Each of them, the firm is selling goods for ₹10,000 on credit. So for the business, Mr. A, Mr. B, Mr. C, Mr. D as well as Mr. E will be debtors. And their total amount 50,000, 10,000 for each one. So 50,000 is the value stands for the sundry debtors. So be sure of that. When a firm used to make credit sales, then only sundry debtors arise. Sundry debtors never arises out of the cash sale, because the cash is being received at the time of the sale. So there is no further relationship with the customers. But when the firm used to make any sort of credit sales, definitely the firm will make a record to all those customers to whom they are selling goods in terms of the credit. Their names, their account details, what is the amount the firm is supposed to receive out of them. So sundry debtors represents total credit customers of a business. The business is about to receive money from the sundry debtors in future course of time. As they are making credit sales, after a little period, they will get the money from them. Be sure of that. The firm receives or supposed to receive from sundry debtors within one financial year. That should not be in the long run. The sundry debtor must pay their amount payables before the end of the financial year. So business is allowing credit sales for short-term period to the sundry debtors. That's why the sundry debtors is considered as current assets, because the firm is supposed to receive or receivable money from the debtors within short period of time. What is the effect in accounts? While we will prepare the balance sheet, the sundry debtors is shown on the asset side under the heading of current assets. That is the main concept behind the sundry debtors. So here one thing we must remember, the sundry debtors only arises from the credit sales of the business, not from the cash sales, and it is by nature a current assets for the business.